You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast.
Welcome back, everyone. Welcome back, Brandon. How's everything going?
Hey, going well. I'm a little bit tired, actually. We're doing another podcast recording in the afternoon, aren't we?
Yeah.
Always a recipe for something interesting to happen.
Yeah, hopefully we can stay awake through it. Always these afternoon ones are a little bit sleepy, but
yeah, they are, aren't they?
I think it's better that we are still able to do it every single week. Keep that going for the rest of this year. See how long we can go.
It would have been so easy for us to be like, we just don't have to, we can just skip it this week. But now that we've been so consistent this year, it's just like, no, we got to keep going. We got to push on.
Yeah, exactly right.
Episode 97. So it's like, it's so close to the 100 as well. So
yeah, that's the other thing. We don't want to drag that out too long. I want to get there. I'm excited.
Yeah.
I'm excited to get to the 100.
It's a good milestone. We've been doing this for a long time. Anyway, what you been up to lately?
Not a lot. Same in Melbourne here. Still in lockdown.
Oh, yeah.
Exciting.
Have conditions eased at all, or like what's going on?
There was a slight change maybe a week or two ago. Can't remember exactly when, but nothing substantial. There was really no change at all. We're expected to hear some news in a couple of weeks from now as to whether we can loosen some of the restrictions, but we'll kind of see where we go from there. I'm not getting my hopes up or anything. Just kind of see what happens.
Man, it's crazy, and like it's such a stark contrast because like the reason we're recording this early is tomorrow I'm getting up and going down for a bushwalk in some New South Wales national park or something like that. So it's like, sorry to rub if that's rubbing that in a little bit.
And you were just in the Gold Coast as well, like
yeah, that's right. And I've just come back from London, and yeah, exactly right. I've got a bit of a cough though, which is a bit annoying, but no, I'll get over that. It's fine.
Oh dear. Yeah. So I mean, we've got a couple of a few different stories to talk about this week. One thing I did want to mention, I'll get into the sponsor in a sec, but just for everyone listening, earnings season will be coming up over the next couple of months. I don't think we'll be getting into it. Probably not next week, but more likely, over the next few weeks. So if you have any companies that you want us to go through, then head over to the YouTube version of the podcast, click on the latest episode, and just leave us any companies that you want us to cover, and we can do our best to cover some of the popular ones, because there's always way too many companies to get to everything and satisfy everyone. So make sure you let us know what you want to see.
Yeah, exactly. Yep. Yeah, that's true. Q3 is now finished. It's over. Or that's what is it? Q4 for Apple, or Q8 2097 for Zoom?
Yeah, I was just thinking that 2023. They're in the future.
Yeah. Q1.5 of 2023.
Oh God. Yeah, I mean, Thor Industries is like that as well. They reported maybe 3 weeks ago or something, and they reported their full year earnings. Their financial year ends in September, which is just stupid. Just don't do it.
It's bizarre, isn't it? Just doesn't make sense. Yeah. How many times have we said that though on the podcast? I reckon we give that a mention every other week, how stupid it is that quarterly, a company's quarters aren't standardized. It's so frustrating. Anyway, is what it is.
Yeah.
Should we get into the sponsor and then we'll get going?
Yeah, absolutely. So this week's episode is sponsored by Sharesight. So Sharesight is an application that you can use to track the performance of your stock portfolio, and it will allow you to keep track of a number of different things, such as capital gains, dividends. If you have dividend reinvestment plans, then it will do all of those calculations for you. Currency gains, if you're buying shares internationally or you hold foreign currencies. And then the main reason why I personally personally use it is when it comes to tax time. So Sharesight generates up to 10 different reports that can be used at tax time to work out things such as your capital gains, your dividend income, and more. And at the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. And you can use that to sign up to a free plan for as long as you want, try it for as long as you want. And if you want to sign up to a paid, more advanced subscription, then you can also use that link to get 4 months free when you sign up to a yearly subscription. So
4 months free.
It's insane. I don't know how long. I've said this for a while now, though.
Yeah,
but,
yeah. We'll just keep saying it until it stops working, I guess.
I'm genuinely not sure how long that 4 months free will be for. It was 2 months previously, and then they upgraded it. So they'll just probably let me know one day that that's finished. So make sure you get it if you're interested.
I mean, maybe if we just never tell them, maybe they've just forgotten about it. So maybe if we just don't tell them, then it will always be there.
Yeah.
So keep it on the down low, please. Nobody write into Sharesight and ask about this special deal.
In fact,
just take it while it exists.
Yeah. In fact, nobody take up that offer, because once you take that offer up, they'll probably notice and then they'll take it away for all the people in the future. So it's best if you just don't sign up.
That's got to be one of the dumbest things you've ever said, Hamish.
All right, what have we got?
It makes absolutely no sense. Please don't do that. We can't. We do need some money to keep running this podcast. Oh dear.
It's already setting in the afternoon podcast for me.
Sorry, what did you say?
It's already setting in this afternoon podcast.
We're
only 5 minutes in and I've already fallen asleep.
It's almost like I feel like I should have a beer right now. We should do almost like a happy hour podcast.
Yeah.
You know?
Couldn't make it.
Cheese and crackers and some dip. That'd be nice, wouldn't it?
Yeah, definitely. Couldn't make it worse. So. Yeah.
Sorry?
It couldn't make it worse.
Yeah, that's definitely true. All right, let's get stuck into things.
Yes.
Probably the biggest news story that will be old by the time that this podcast comes out, but it is the biggest news story that's come out since we did our last podcast, is that Donald Trump has caught the Rona.
Oh, no.
He's caught the Rona. Pretty insane. He went to hospital. He got discharged from hospital. He said a whole bunch of who knows what on Twitter. It's a bit of a non-story. It's just kind of like a headline, isn't it? But there's not really too much of a story behind it. Interestingly, there's how funny is it? They're now calling it the White House cluster. There's a White House cluster of coronavirus.
That's hilarious.
Because the most recent person, press secretary, what's her name? Kayleigh McEnany? I don't know how to say it. That lady that just tries to stand up to the press every day and defend what Donald Trump has done. Man, that'd be one of the hardest jobs in the history of humanity.
Well, what he actually meant was...
Yeah, what he actually meant was that, no, everything is just and reasonable, and he actually believes the exact opposite of what he said. Anyway, so she's the latest one to get the virus in the White House cluster. It's pretty interesting. It says here the cluster of infections connected to Mr. Trump has grown to more than a dozen.
Wow.
It includes Miss McEnany, First Lady Melania Trump, Senior Advisor Hope Hicks, Trump campaign manager Bill Stepien, former advisor Kellyanne Conway, and there's this massive long list of people that have all been tied to the president and this White House cluster, which is pretty insane.
Anyway. I feel like this story lasted like 3 days. Didn't he just get it and then he was discharged? I thought,
he went to hospital and everyone was going and then he got discharged. And I don't know, it's been kind of interesting watching the response from just people around the world, and even from my own circle of friends, because I don't know, half the people that I run into are saying, I hope he gets the coronavirus really bad. Some people are like, I hope he dies from the coronavirus. That'd be something. And then other people are like, I don't like Trump, but of course you got to wish him a safe recovery. I think that's probably where I stand as well. But it's crazy how many people have just come out and just been like, death to Donald Trump.
Yeah.
It's pretty insane.
I find that
people hate him. They really hate him.
Yeah, I find that really, really strange. I think, regardless of what you believe and what your political views are, I find it really strange seeing people cheering on someone being sick. I can't get behind that. I don't know. It's just,
even if you hate the person, I mean, come on. It's like you don't cheer for them being sick.
Yeah, exactly. Yeah, very strange.
Anyway, what's going on in other Trump news? US President Donald Trump has abruptly cut off stimulus negotiations with the Democrats in Congress, ending any hope of economic relief for Americans struggling amid the coronavirus pandemic until after the election. The stock market plummeted in response to the news. What? Did you see that, Hamish? It absolutely plummeted.
What was it down? 5, 10, 15%?
Yeah, 20, 30% short. Oh, no, wait. Dow closed down 1.3%. S&P 500 dropped 1.4%. NASDAQ fell 1.6%. The article's like, today, the president lost patience. In a series of tweets, Mr. Trump accused Ms. Pelosi of not negotiating in good faith, blah, blah, blah. It's pretty funny. He's essentially just said, we're going to revisit these negotiations the day after I'm reelected. So maybe he knows potentially that he's beat, and he's just like, all this stuff that I said I was going to do, we're now going to do it after I get reelected. So it's just like, I don't want to deal with this. The next person can deal with it.
Yeah, it's pretty stiff on the people, where the two parties are kind of just bickering over what's going to be in the bill and who's going to get stimulus. And while they're debating it, nobody gets anything. You'd think they could just do sort of a little bit at a time, do the bits they agree on, and just get that through, rather than bundling it all together and being like, well, if you want that, we have to have this. Just get through the stuff that everyone agrees on. Which you would think would be a substantial amount, but maybe not. And then you can fight over the rest of it. But yeah,
it's kind of like the NBN in Australia, how it was like it just so much back and forthing, and no, it should be like this, no, it should be done this way, no, it should be this, and no, it should be that, and then 10 years later, and it's still not done, and now it's like obsolete technology. Well, as soon as the 5G network comes out, and it's just like, man. That's like the problem of just this, I guess it's the problem of things being political, isn't it? There's just a whole lot of back and forthing and arguing and this and that. And yeah, like in this case where people could actually be benefited quite a bit with the deal getting done, it's just not going to happen because there's too much bloody bickering.
Yeah, I mean, there's some things in politics where it's good that it goes a little bit, it's hard, I guess things change slowly and it kind of only moves a little bit in one direction, a little bit and then a little bit back. But there's some things where you kind of just want it to be quick and effective. And stimulus seems to be one of those things where you'd rather go a little bit broader and then reel it in, rather than just fighting over the fine print, fighting over it for a significant length of time. Yeah.
And that's what Australia did. Australia started broad. I mean, they got criticised because their stimulus with the JobKeeper and the Job Seeker was probably a little bit, well, from my experience anyway, it was probably a little bit too lenient. But that, it's like what I think I've quoted Ray Dalio, what he said on the stimulus idea. I think I've quoted him previously. He's like, it's just governments trying to get a great deal of money to the people, and they're doing it in a large but imperfect way. And you're right, it's because they're under time pressure. They got to get it done, right? Even if it's done imperfectly, if it gets done sooner rather than later, then it's still going to have some effect. It's still going to be beneficial to a lot of people. And I think that's what Australia kind of did. We maybe rushed a little bit and just tried to implement these stimulus like JobKeeper and Job Seeker. We tried to implement them as quickly as possible. But I mean, even though they weren't perfect and there were problems with both, at least it got done, and it was actually helping people relatively quickly. Yeah. Yeah. I suppose that's, it's that was kind of your point. Yeah.
Yeah. It's interesting that he said that he's going to look into negotiating after the election, because I saw something else that he said that he promised tax cuts if he was reelected as well. So he's obviously trying to, I mean, this naturally you would expect this, but he's obviously stacking the things that he can promise right up just leading up to this election. So it's certainly going to be fascinating to watch the remaining debates. I think there's a couple more debates to go.
Couple more.
So that'll be a good Friday night watch. Get the popcorn out.
Get the popcorn. Get your mute button ready. Anyway, I think that's all we got to talk about for. We need to talk about more business, less politics. But it's just unfortunate this week is that a lot of the stuff that's happened has been has been fairly political. Do you want to talk about corporate travel? Because this is a very interesting story that you've got. Tell us about it.
Yeah, so I'll lead into this with a question that we had left on the podcast, because that way I can answer this question and provide
this is a Q&A. Yeah, someone submitted a Q&A question. Yeah,
so this is one of their questions. Maybe we can get to the other one a little bit later in the rest of the Q&A. But this person said, "Hey guys, love the podcast. Couple of questions. And the first question is, Hamish, will you be participating in Corporate Travel's 1 for 4 capital raising?" So just to, I guess, give a bit of background, last week on the podcast, we spoke about corporate travel management, I think it was last week, and an acquisition that they made of a company called Travel and Transport, an American corporate travel business. So
yeah, that's right.
I won't go sort of back over that acquisition. Right. If you want to go hear my thoughts and hear the story on that, go check out that other episode from last week. But basically, as a part of doing that acquisition, they're raising capital through raising shares. So they're selling more shares to institutional and existing shareholders. So they're raising about $300 million from both. I think it was maybe $275 million. And most of that's coming from institutional investors that were already shareholders. But there is a decent proportion. I think it was about $110 million, which is coming from existing retail shareholders. So
nice.
Me falling into that category, I was very, very curious to see what I could do from this. And it's kind of an interesting story if you're an existing shareholder and what you can kind of do, or what you can kind of do from this deal. So basically the deal is you can buy 1 share for every, this was the original deal. You could buy 1 share for every 4.03 shares owned. So in other words, you could add to your existing shares by 25%.
Yes.
And then the day before the raising started, they actually changed this to, they actually doubled it. So you could actually end up getting 1 for every 2 shares that you owned.
Okay.
So that made it very, very interesting, because not only could you get 1 share for every 2 that you owned, you could buy them at a significant discount to the current market price. So the price that they were offering the shares at was $13.85. And the current stock price at the moment has been $17.50. It's been hovering around that for a while.
So the $13.85, that's not some price that's set by any sort of market. That's literally just the company saying, we as this business are going to sell new shares for, we've decided this price. Do you want in? Is that right?
Exactly. And the key here to what I'm about to explain is that this is only available to existing shareholders. Because imagine if they had just done this to the public, anyone could have got in at these shares at $13.85, you would expect that the stock price would immediately fall to, the public stock price would fall to $13.85, because why would you pay $18 on the public market when you could just get access to this new issuing and pay $13.85? So that difference in the stock price today and the price that you can buy these shares is only possible because only existing shareholders can get access to that discounted price. But to give you a little bit of details about I guess what's happening with this raising is, because of course they're raising more shares, shareholders are going to be diluted. So they're looking to raise about 25% more shares than currently exist. So approximately speaking, shareholders will be diluted by 25%.
Okay.
And basically this deal, because it's accessible to existing shareholders, allows you to offset that dilution by investing more at about a 20% discount to the current market price. So that's that difference between $13.85 and the $18 that the stock's currently at.
Right. So is this kind of a way to protect existing shareholders from experiencing too much dilution?
Yeah, exactly. So there's really 2 things that you could do here. The first thing that you could do is kind of what I just explained, where you can just stop your dilution by contributing more capital, basically. So you increase the number of shares that you have personally by 25%, or I guess in this case you could do it by 50% for 1 for every 2 shares. And that way you're contributing more money, but you're not being diluted after the capital raising, if that makes sense.
Yeah.
The other thing that you could do is, instead of contributing more of that money into increasing the number of shares that you have, you could have used it as an arbitrage opportunity to basically lock in a guaranteed return for you. So it's really confusing, and I'm going to be doing a video on this probably in a couple of weeks once all of this is settled, because it's a lot easier to explain with some visuals. But essentially I can just sort of go through it and explain what I personally did, and hopefully that'll help explain how this works. But
an arbitrage opportunity, for those that don't know, is like a risk-free way of making money, like a situation where you're presented with a guaranteed way of making money.
Yeah, exactly. Yeah. So, so what I did, so this is kind of the order of the things that I did. The first thing I did was I sold 50% of my stock at about $17.50. So when I found out that, I can buy an additional 50% of stock at $13.85, I immediately sold half of my shares. And the key here is that I sold them after the registration date, which meant that I could still buy an additional 50% of the shares I originally held, because there was a certain cutoff date at which they look at their books and they say, okay, Hamish has 1,000 shares, so he can buy an additional 500. And if I had sold before that date, then when they looked, they would have seen that I had less shares. So I could have then bought less, if that makes sense. A little bit confusing, but I sold after the registration date, which meant that I could still buy back the exact same amount of shares that I sold for $17.50. And then I think it was yesterday that the issuing opened, and it opened, and I put in my application and I bought back the exact same amount of shares for $13.85.
Which that's so good.
Yes,
that's fantastic.
Yeah, so I mean, one thing to mention here is that it's still in the application stage, so technically it could not go through, meaning that I don't get to buy those shares at $13.85. But assuming that all goes to plan, that means I would have sold a certain amount of shares, let's say 500 shares. I would have sold 500 shares at $17.50 and then bought the exact same amount of shares back at $13.85, all in the space of a day. And that's an instant profit of about $3.50.
So for each share that you sold, you would have profited $3.50 per share.
Yeah, that's correct. Yes. So
genius.
And there's no risk to that at all. Even if this deal doesn't go through, I can just still buy back those same shares at the market price right now, which is pretty much the same price that I paid minus my brokerage costs. But just doing a little bit of quick maths on my average price that I had invested for my entire corporate investment, just doing this little transaction is the equivalent of taking an instant 25% profit on my entire investment. Taking a 50% gain on half of it and then therefore 25 on the entire investment. So
I think it's definitely worthwhile. I mean, it sounds genius. And I mean, you're right. It's definitely worth taking a risk, even if there's something that you just didn't see that's hidden away in the fine print and they actually come back and say, no, you can't do that. Then I think it's worth a risk, because it's unlikely that the share price is going to move that drastically. And all you'd lose is just like $10-20 on brokerage costs. So it's probably a very worthwhile risk to take in pursuit of the arbitrage opportunity. But to me, it sounds like you've definitely done it.
Yeah. I mean, there's no reason why. Well,
why it shouldn't.
Yeah. The only thing is if the application doesn't get accepted, but there's no reason, as far as I can tell, that it wouldn't. And I think even after that explanation, a lot of people are probably like, "What? What did you do?" So I'll definitely be making a video on YouTube going through, and I can display everything that I did so that I can show you how I went through it. But it's a kind of a unique situation where it's not going to happen very often. It's not like anyone could have done this. You had to be a shareholder of Corporate Travel. They also had to be making an acquisition and raising shares. So it's a very unique situation. It doesn't happen very often.
Very interesting. Very, very interesting. That was awesome. Yeah. Well, I'll be very interested to watch your full video when it comes out. Once it's all said and done, once it's all been settled.
Definitely. Yeah.
And you've bought your new Tesla with the instant 25% profit that you've made.
The thing is, it's a big position that I have in this company as well, by accident as well, just because of the fact that the stock's gone up so much so quickly.
What was your average buy? Didn't you get it when it was like $4 or something like that?
Yeah, so I think my average was about $7.70. And I think I worked out that with this arbitrage, I'll be basically lowering my cost basis to about $5.50, which is insane considering the stock's almost at $20 per share at the moment. So,
wow,
yeah,
nice one. Yeah, it's been very turbulent, this company, hasn't it?
Oh,
got hit pretty hard with the COVID lockdown, as all travel companies did. Yeah. But yeah, exactly. But yeah, we've spoken about it plenty of times on the podcast before about how the financials seem to hold up quite well. So very interesting. All right, should we move on?
Yeah. What have we got? What else have
we got? I hate getting so political, but big news in Australia this week is that the Australian federal budget was announced. It's nothing too crazy. I mean, it's just basically said exactly what you'd expect it to say, which is that we're struggling quite a bit as most economies around the world. But I'm not going to go through all of it because it's so long. Like, I was just looking up budget key points, and even those articles were like 10 pages long because they do key points for everything like health and education and construction and blah, 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 and, climate and jobs and all that sort of stuff. So, I mean, I would actually encourage you, if you're interested in learning more about what was just announced in the federal budget, go to the ABC News website and just type in federal budget 2020 winners and losers, because it's got a really good infographic where you can click on different categories like taxpayers, economy, construction, regional Australia, businesses, vaccines, all this sort of stuff. And you can see kind of what was announced under each category. So it's actually quite cool. But with that said, we can go through some of the major stuff. So this article says Australia's economy has taken its biggest hit since the end of World War II as a result of the virus, which was to be expected. The budget deficit is predicted to hit $213.7 billion and then drop to $66.9 billion by 2023-2024. That's after it was $85.3 billion last financial year. Oh, okay. So pretty big numbers there. But this is the interesting one. Our net debt, which is how much we owe overall, is now expected to reach $703 billion this year and peak at a record $966 billion by June 2024. So Australia, like a lot of countries, this is not just Australia, but like a lot of countries, has been plunged into quite a lot more debt as a result of the virus, which I think a lot of people get tied up on debt. Like, it's definitely used as a bit of a political campaign, under this government, our debt went up from this to this. But I mean, debt, there's a lot of factors to debt. It's like what we even talk about just when we're assessing companies. Like, generally too much debt is a bad thing, but at the same time, debt can be handy. If you can utilize that debt and get a good return on it, then actually it's not so crazy to take on debt. But what did it say here? Before the pandemic, the government forecast there would be $5 billion surplus for the 2019-2020 financial year. Well, they got that wrong, didn't they?
That's hilarious.
Yeah.
Oh dear.
But yeah, I mean, you can't see a pandemic coming, can you?
No, not at all. No, it's yeah, it's interesting the whole use of debt in government, because I mean, there's always there's certain things where it's just a necessity that they use debt. And I mean, if there's a pandemic and there's a lot of people who individually have lost their jobs and businesses that have just gone to zero revenue or near zero revenue all of a sudden for no reason other than the pandemic, then the government's gonna have to provide some kind of relief to those people. So it's not. And
as I understand it, well, it makes sense. It's less about the absolute number of what that debt is. It's more about the debt number in relation to how how well Australia will be able to pay it back over time. That's the important thing, because if they just took on heaps of debt and then just went to town and spent it and on things that aren't going to contribute to an increase in Australia's productivity, an increase in our GDP, an increase in our income, then that would be terrible. But if you take on a lot of debt and you put it to use and you create a massive rise in GDP and you can pay back that debt quite easily, then that's great. That's awesome. So it's about how well you're able to pay it back, I suppose.
Yeah. And I mean, Australia is one of those countries where their debt is in their own currency. So it's not as if it's not as if they could ever bankrupt or default on that debt. They will just print money to cover it. So, and I mean that there's a cost. It's not obviously free. There's an inflation cost to that, but it's not as if this debt number could get so high that the government's just like, oh, we can't pay back these government bonds anymore.
Yeah, exactly. Yeah. They'll just have flow-on effects, flow-on negative effects.
Yeah.
What else did this say? The government is bringing forward its second stage of tax cuts, which means that millions of Australians will have more money in their wallets potentially from the end of October. It's planning on backdating the cuts to July this year, and to make up for the 4 months that have already been, those refunds will be built into wages until the end of this financial year. Okay, sure. It means people who earn between $45,000 and $90,000 will end up with an extra $1,080, but it'll benefit higher income earners the most, with people earning more than $90,000 taking home an extra $2,565.
Right.
So there you go. They also announced that the government's also keeping the low and middle income tax offset for an extra year.
Yeah, okay. Yeah, because I remember that first stage of tax cuts was mostly beneficial to the lower and middle income tax brackets, I believe. And then this...
Yeah, I can't even remember that.
Yeah, and then there was 3 stages, I think. I know that the second stage was more geared towards middle and higher income earners.
Well, this is this one.
That must be the one
bringing
that they're...
forward the second stage of tax cuts.
Yes, I think that was supposed to be next year or maybe the year after that or something. And then the third stage, I have no idea what the third stage was, but who knows? Very interesting. Yeah.
Yeah. What else? $2.3 billion in announced funding for investment in COVID-19 treatments and vaccines. $750 million in funding for COVID-19 testing. $171 million for the extended operation of up to 150 dedicated respiratory clinics to manage and diagnose COVID-19 cases. So there you go. They're certainly pumping money towards finding a vaccine. But fingers crossed that comes around soon, because I don't know about you, Hamish, but I'm kind of getting sick of this whole COVID-19 thing.
Oh, you're telling me. You're telling me.
Yeah, I am telling you. Yeah, I shouldn't be. I should be keeping my mouth shut and thanking my lucky stars that I've got it so good up in the ACT.
Well, what was it? Johnson & Johnson, that's their stage 3 trials are expected to end at the end of October, I think that was.
No, that was the Pfizer and Pfizer. And the other one. I can't remember. Moderna, yeah, I think so.
Yeah, okay. Well, at least we're getting some vaccines that are getting to their end of the trial, so hopefully some traction. Hopefully they pass.
Yeah.
Real shattering.
Look, to be honest, I don't know what to expect, because I feel like even if they don't pass, they're still going to pass. I feel like they'll be like, there'll be a huge pressure on some people to tick some boxes. But hopefully it shows promise, the stage 3 trials. Fingers crossed.
Yeah. Of course.
Because that would be nice.
That would be good. Yeah.
As long as I'm not under Bill Gates' control. Hopefully those microchips don't affect me.
Oh, no.
No, bad. Stop talking about it. Don't talk about that. Don't joke about it. You remember what we were saying? It's like, I think I watched some video and they were saying you shouldn't even joke about it, because there are some people that will just start talking about it, and then it will just spread and spread and spread, and more people will believe it, even though it's completely false. Anyway.
Oh, dear.
Anyway. Oopsie. What should we talk about next?
Yeah, what have we got?
Oh, you want to move on to a happy story?
Yes, yeah. Let's get some happy news.
Guess what?
What happened?
Title here: Ushi collectors get one last chance. Yeah, here we go. Ushi collectors have been given a final opportunity to complete their sets after Woolworths ended the Disney Plus promotion early due to unprecedented demand. The supermarket giant has revealed it will hold a Disney Plus Ushies swap day at Woolworths stores and participating Metro branded stores on Saturday. Mark this down, Hamish, you got a pen?
Yep.
Saturday, October 10th, between 10 a.m. and 2 p.m.
How are they allowed to
there
do
you
that?
go.
Considering we have
I've got no idea. It seems bonkers that they're actually allowing like people to just bring in and swap these little plastic toys. I mean, you put your dirty mitts all over them, and yeah. They did say that they are going to have to sanitize every Ushi before it's given over to. So it's kind of funny. What does Woolworths Director of Stores, Mr. Robert Moffat, have to say? He says, swap days have historically been an important way to help customers fill the gaps in their collection, but these plans were initially paused due to COVID-19 community infection rates in many states at the time. However, with positive COVID-19 cases continuing to fall across Australia and state borders beginning to open, we're confident we can apply our learnings from the last 6 months and implement COVID-safe measures. We will adjust how swap days operate to help keep our customers and team members, blah, 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 blah. So there you go. Apparently, you're just going to be given a day where you can walk into the store and trade your Ushis. So this is actually, I wanted to put this one in specifically because I need your help, everyone that listens to this podcast. I'm going to be at the Dixon Woolworths in the ACT, and the one that I'm missing, and I really hope that someone's got this and they can trade with me. The one that I'm missing is the ultra rare Baby Yoda. So if anyone out there has a spare Baby Yoda that they don't need and they'd like to trade it for a lesser known figure, then please come to that Dixon Woolies. I'll be very thankful. I'm really hoping that I can get somewhere between 5 and 10. That'd be ideal. Imagine if that happened.
There'll probably be a lot of people who go there now.
Nah, I'm not going to the Dixon Woolworths. Actually, it could be. Who knows? Anyway.
Why did they end it early due to unprecedented demand? Like they ran out? Is that what they mean?
Maybe they ran out. Who knows? It's clearly worked. And if you've got a Baby Yoda, it's meant that your little Ushi's worth $100,000.
It's been an interesting little attempt to get people back into picking a side between Woolworths and Coles. When did this start?
Yeah.
Maybe a year ago? It was pretty recent that they started doing these little collectibles, right?
Oh, right, the collectibles.
Like Coles started it, I think, with the
Coles. They
had
a really crazy good one.
Yeah.
What was it? The minis, the little miniature,
little shop or something, mini shop. I don't know.
This blows my mind. I don't understand. Like, why would you want a little plastic box of cereal? Or a little plastic like laundry detergent or a banana. Yeah, it's just like, what the hell? But people, I don't know, people went crazy for it. I mean, it was so popular. So, of course, like Woolworths is going to copy it. And why not? Let's get Disney on board with all of their brands and that'll drive even more demand. I mean, it's a stroke of genius to get people back into the stores.
Yeah, it's fascinating. Fascinating stuff.
But anyway, there you go. So if you've got a gap in your Ushi collection, I know you do. I know there's that one that you wish you got but didn't. Then October 10th is your day. Man, is that going to be, that is Saturday. Wow. So this will come out on Saturday. So yeah. So if you hear this in the morning.
You've got 2 hours.
Then you've got 2 hours before the open day starts. So go.
Even less
Stop
than 2
listening
hours.
now.
We're 40 minutes in. Yeah, stop listening.
We're 40 minutes. You've got like, who knows, for some people, their nearest Woolworths might be an hour away if you're living regionally. Go right now. Get in the car. Come on, hurry up. Go. Oh, dear.
Here's one for you. We've got we found out that the Apple iPhone event will be held next week. So the time for Australians is on the 14th of October, 3 a.m. So either that's an early rise or a late start for some people.
late finish.
Whichever you prefer. If you're a morning person, just get up a couple hours early. If you're a night person, you'll probably be awake. So that's fine.
Yep.
But I want us to do a little bit of a bet or a guessing game, I guess. and then we can come back
sure.
next week, because I've spoken about this a couple of times. Something I'm curious about is how they, and this is probably boring to a lot of people, but I'm very curious as to how they'll price the iPhone 12, which is the new device that's coming out, because up until this point, over the last few years, they've done significant increases in the price for the iPhone. And my theory is that they couldn't do that and still, beat or get similar sales to the previous years. I think that they're either going to keep it the same or have a lower price than the iPhone 11. So these are the prices for from the iPhone 11, and then you can decide what kind of guess you want to have. So for the iPhone 11, just the standard model, it started at $699 US, which was $11.99 Australian dollars. And then the top end one, the 11 Pro Max, was $1,099 US, which is 1,899 Australian dollars. So what do you think? Where are you sitting?
I don't think it's going to be cheaper.
You don't think it's going to be cheaper? Yeah. No. I think it's, I don't think so either. Yeah.
I think Tim Apple is going to want that bonus this year. I'm actually going to say slightly higher pricing.
Yeah.
I'm going to just put it out there. I'm going to say slightly higher for both.
All right. Well, let's say this. The iPhone 11 Pro Max was 1,900 Australian dollars. Do you think that the 12 Pro Max will be over at 2,000 or 2,000 or above? I guess you.
I'm going 1950.
1950. Okay. Yeah.
Yeah. Just a little price bump.
It would be. I could not imagine them doing it more than a 2,000 Australian dollar iPhone. Nah. That is insane to me.
That's a laptop.
That's a laptop. Yeah. Just it's not an Apple laptop. Apple laptop's $6,000, but a standard laptop, sure.
True. Oh my gosh, tell me about it.
Yeah. I personally, I think they'll keep it the same. I think the base model iPhone 12 will be $699 US. That's my prediction.
Okay.
Yeah.
Yeah. So you're going the same. I'll go so that we're different. I'll say slightly more.
Okay.
Slightly more for both. 1950 for the Pro Max. But they'll probably come out with some cheap. That's what they'll do. I reckon that's what they'll do. They'll put the standard one up and the highest spec iPhone up in price, and then they'll just come out with this. Oh, but we understand that COVID-19 2020 is so hard. You've got no money. We've got all your money. So we're going to announce the iPhone extra small little Pro Max 1-8, and it's going to be like it's the cheapest iPhone we've made in years.
You can call, you can text. That's it. It's $1,000.
Yeah. And I reckon that's what they'll do, because otherwise everyone will be like, iPhones, they're so rude of Apple. 2020's come around and they've put their prices up again. So I reckon they just come out with some cheap iPhone just to say, so that their PR campaign can be, we understand that a lot of people are doing it tough, but want uncompromised quality with Apple's products. That's why we're introducing the iPhone 12 extra small, where you can still horribly overpay for the specs, but in total you will spend slightly less.
Oh dear. Wait, weren't they going to not include the charger or something in the box? Are they going to do that with this iPhone? So,
I think so.
Maybe this is where I think they'll do. Maybe they'll keep the price the same, $699.
Same, and take away parts.
But they take away the charger and the headphones, so you end up paying more. Maybe they'll do that. I could see that.
Yeah, that's probably what they're going to do. Actually, that's really smart. Because, I'm not sure if they're still going to. The last I heard was that they're not going to ship them with chargers. It'll just be the phone. It'll be a point where it'll be like, the new iPhone costs 2,000 Australian dollars plus extras if you want a processor or a camera.
It just sounds ridiculous. It's like, do you want the pieces or do you want us to put it together for you?
Yeah, exactly right. It just sounds ridiculous.
Oh, no, you've got to come pick it up from China. You've got to come get it.
Yeah.
$2,000 shipping.
You've got to work in the factory. You've got to build it yourself. We just give you the sticker. It's funny, isn't it?
Yeah.
Anyway, shall we finish off with this? I suppose there is this last story which we should talk about. It's not particularly exciting. the headline, which I think I made up, is that I didn't make this up. Queensland government throws $200 million at Virgin Australia to keep their headquarters. So,
Oh, wow.
Interesting. The Queensland government has confirmed it will invest millions of dollars in Virgin Australia to ensure that the embattled airline remains in the Sunshine State for at least the next decade. At a Boeing testing facility in Brisbane's West on Monday, the Premier confirmed the Queensland Investments Council will inject $200 million as a part of Virgin's restructuring plan set up by the new owner's Bain Capital. The deal, which comprises both an equity investment and debt loans provided by the QIC, the Queensland Investments Council, to Virgin, is an agreement to keep the company's headquarters in Brisbane for the next 10 years. Approximately 10% of the funding will be through a capital investment, with the remainder of the support facilitated by debt loans.
Right.
So this is interesting. Yeah. So I don't know who this dude is, but Mr. Dick, whoever you are, I'm not sure who you are, noted that the government's stake in Virgin would provide a 7% return on investment for Queenslanders. So there you go. Well, he says, without competition, monopoly pricing would have crushed regional Queensland, and that's what we wanted to avoid at all costs. We saw what happened when Ansett collapsed. The price was paid by regional Queenslanders. So there you go. So they've made this play, it seems like, to get maybe a little bit of return over time on their cash, but also to, I don't know, to help out regional flights around regional Queensland, I guess.
Yeah. So I mean, I guess from reading this, it seems like the majority of their investment is a loan. So they're loaning money to Virgin, and then 10% is going to be their equity investment. So they're really only investing $20 million, which is a pretty small amount.
Into it, yeah.
Interesting.
I wonder if there's more fine print to this that we don't know about, because it seems like like you invest 200, or I guess 20 million, but total 200 million. I guess is the Queensland Investments Council happy with just getting a 7% return on their loans? I mean, is that right? Or is there some sneaky deal that, Virgin Australia will have to keep some certain flight paths throughout Queensland for the next 10, how long was it?
Years.
I can't even remember. 10 years. Because, I'm not sure. I'm not sure at all. But, yeah. There you go. Because it seems crazy. Like, we'll give you 200 million in funding right now, just so that you keep your company's headquarters in Brisbane. It's like, Queensland, I'll move, new money headquarters up to Queensland if you give me 200 million. That's fine. I'm sure I'll employ some people for you. That's fine. I'll give you a little boost in your jobs if you give me 200 million. I'll just move up to Queensland. I don't know.
7% as well. Come on. Who's running that? Who's running that investment? For Queensland government.
You'd do better. We'll take over for Queensland government. Come on, give us a shot.
Queensland government.
Brandon and Hamish.
Yeah, we could do it.
Consider this our application.
Queensland government invests $200 million into Vanguard Australian Shares Index. Makes 10%.
Makes staggering investment in Facebook, Tesla, Thor Industries.
That would be hilarious.
Corporate travel.
Could you imagine if a country just did that? Like, a part of the government was that
revenue.
They had a really serious part of their investment, and an investment part that they took taxpayer revenue and then they looked for making significant investments. I guess they do that to some extent. Crazy. But
but there's just like a Warren Buffett type character
that's what I'm thinking.
For the government that's just running this massive share portfolio, raking in dividends. And it's like all of the companies, the American-based companies, are actually like paying millions of dollars of dividends just to Australia.
Yeah, and like all the taxpayers are not paying tax anymore. They're just receiving dividends from the government. Government's just cruising.
All of the citizens of Australia, are shareholders in Australia and are receiving dividends from Australia Co. That's crazy. That's interesting thought topic.
Oh dear. Should we
anyway,
have we got any Q&A that we can go through?
Yeah, there was one that we had, but I kind of tweaked it a little bit. because the original question was kind of just asking for financial advice, and we're not about that. We are not about financial advice. But the question was really asking what are some, this person was looking to invest in some ETFs, and they were asking what are the main ETFs that people look at? What are the main, ETFs that generally people go to? So the way that I kind of structured it is, let's talk about maybe what are the main ETF providers around the world. Because the way that ETF works, or ETFs work generally, is that there's this big company that has a lot of investors, of assets under management, and they offer a wide variety of different ETF products with different investment objectives. So I thought we'd go through maybe the five big ones. And the biggest one, I actually thought the biggest one was going to be Vanguard. But the biggest one is actually iShares. I didn't know that, which is a subsidiary of BlackRock. So BlackRock iShares ETFs, you've probably heard of them before. They have assets under management of $1.8 trillion, which is pretty insane. And then second is Vanguard with assets under management of $1.3 trillion. Then third is the American-based State Street Global Advisors, or the SPDR. ETFs. I think they have the biggest ETF in the whole world, which is SPY, which is the State Street Global Advisors S&P 500 ETF. I believe that is the largest ETF in the whole world.
Yeah, I think you're right there.
So very interesting. But they have assets under management of $772 billion. And then this is one I haven't really heard of, Invesco. Have you heard of Invesco?
It sounds familiar, but I haven't looked into them particularly.
Yeah. They have assets under management of $260 billion. And then lastly fifth is Charles Schwab. They have assets under management of $170 billion. So I would say if you are interested in ETF investing, then iShares, Vanguard, State Street Global Advisors. I mean, these ones are so big that they operate in many markets. Even though Vanguard is, known for offering big American ETFs, they offer Australian ETFs as well. There are some Australian listed ETFs that, through Vanguard you can go and invest in. But
and if these aren't just sort of ETFs that just retailers are buying. I mean, if you look at Ray Dalio's portfolio, or not his portfolio, but some of Bridgewater's portfolios, some of the ETFs in those portfolios are from BlackRock, from iShares, or from Vanguard. So,
exactly.
there's some very, very large institutional investors that are also putting money into these as well.
Yeah. And that's basically all I had to talk about for that one. We haven't had too many days to collect questions. There hasn't been too many days since we did our last podcast, or since the last podcast was released. And we covered the other question earlier on anyway with the corporate travel stuff. So I guess that's it.
Yeah, we can leave it there for this week. As always, thanks everyone for asking questions, for tuning in. And if you have any questions, then make sure you head over to the YouTube version of the podcast, which is at youtube.com/The Young Investors Podcast. Head over there, click on the latest episode, and you can leave your questions there. And as I said at the start of the episode, we're going to be covering some earning releases during earning season over the next few weeks.
Yes.
So if you have any companies that you want us to cover, then you can also leave them there, or feedback or anything at all. News topics, anything really, anything at all. We'll accept it in the comments.
Anything you like.
You can write
Absolutely
whatever
anything
you want there. Anything at all.
Yep.
We won't be mad.
Leave us a scathing review. Do your worst. Go on.
Do your worst. Oh, no.
Brandon talks for 90% of this podcast, and Hamish only talks for 10%, and I really want the balance to be better. And Brandon, sometimes he sounds like he's half asleep because that's just the way his voice is, and then Hamish can blah, 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 and who knows, I don't know.
Every now and again, we get one of those comments.
Yeah.
Not too often, though.
It's true.
Most of you guys are very nice.
Most of you.
Not all of you.
Not you, Gerald. Sit down. Not you, Gerald.
Oh dear.
I'm sorry if your name's Gerald and you really like this podcast.
Yeah.
I love you, Gerald. Thank you very much for listening.
He's already clicked off. He's gone.
He's clicked off. He's unsubscribed. Oh, what have I done? That's all right. I'm more comfortable picking a name like Gerald than saying Matt.
Ben.
Or, John.
Oh dear.
Anyway.
Thanks, everyone.
Hey, guess what we're doing? We're rambling at the end of a podcast.
Yeah,
that's
Wow,
unusual.
that's a first for us here.
That's a first for us. All right, take us home, Hamish.
Thanks, everyone, for listening. Thanks, Sharesight, for sponsoring. Thanks, Brandon, for joining me, as always. Have a good weekend, guys.
See you later.